Hello guys, this is Ashish from hwifx. Again available with another video, and this video is going to be about internal and external liquidity, because liquidity is very important part in the market, because liquidity is the fuel of the market. Market cannot move in either direction without taking liquidity. If market needs to sell, they need to kill buyers. If market needs to buy, they need to kill sellers in the form of buy side and sell side. So if we talk about internal liquidity and external liquidity, so market does what? Market either moves from liquidity to liquidity, or it moves from internal liquidity to external liquidity. External liquidity is some type of swing high or swing low. You can say old high or old low, or swing high, swing low. So external liquidity is always residing above or below this last old high or old low. Okay. But when we talk about internal liquidity, that is inefficiency. Okay. Inefficiency in the market, which is which we call as internal liquidity. Okay, inefficiency is called as internal liquidity. We call it imbalance, we call it fair value gap, we call it BC, sometimes we call it CB, we call it inefficiency in the market, but that is also called as internal liquidity. So always remember, market always either moves from external to external or external to internal. Okay, so it means liquidity to inefficiency, then again liquidity, then inefficiency, because market needs to balance the price. So inefficiency is the imbalance which market needs to balance. So swing high is like this, okay, where second candle is the highest followed by the first and third candle, and swing low is the like this, second candle is the lowest followed by first and third candle. Okay, and in inefficiency is first and third candle does not overlap, and they have some type of imbalance over here, and this area is called the inefficiency or imbalance. This is for the seller selling thing, and this is for the buying. First candle and third candle have the inefficiency, because they do not overlap, and they do not touch, so they have some type of area left over here that we call inefficiency. Okay, so this is inefficiency is called internal liquidity, and this swing high and swing low, that is called external liquidity. Let me type here so you will not be having any confusion. Internal liquidity is here. Always remember, this is internal liquidity in the form of imbalance, either it's for bullish market or bearish market. So this imbalance and this imbalance is internal liquidity. When we talk about external liquidity, so it always resides either a swing high or a swing low, or a old high or a old low. So we say it in external liquidity. Okay, so let me type here as well. So this is external liquidity, and this is also external liquidity in the form of swing high and swing low. So now let's go to the market, and we will try to see what market does in the form of external liquidity and internal liquidity. So let's go to GBP. Okay, we are on daily chart here. So let's see what needs to be done here. Okay, so okay, let's see. We are on weekly. I mostly trade gold, so let's go to gold. Okay, let's see here. Okay, we are here now. Okay, so if we see, need to go to the daily. What price is doing here? Let me tell you. If you see, price took the buy side liquidity or external liquidity in the because there was a swing. high. The swing high was taken here, and then price, you see, came back. Where price came back? Price came back to the imbalance here, and that imbalance is a liquidity. Price came back here to balance the price, because when price was buying here, then they left an imbalance over here that needs to be balanced here. And once price balanced it, then what price did, if you see, there is again imbalance left here. So what price did? Price filled this imbalance, okay, and then came down to take this sell side liquidity in the form of external, okay. Then if you see, price moved from external to imbalance, internal, then internal, then external, then FVG, internal, then swing low, external, then again external, then swing this internal, then again this external. So price is doing the same thing again and again. It's moving from external to internal, internal to external, okay. If you see, price did what here? Price moved here, okay. If you see, price took the external, then came back to this very nice FVG here. Then price went up, all the way up to take the external, then came back down, tapped into this very nice FVG here, then again went up to fill this FVG, then went down, okay, and then went again up, then coming down. There is also FVG. So price is a lot of time doing the same thing, internal to external, external to internal, okay. Let me show you here very nice example, the trade which I took as well. If you see, when price was buying here, it left a very nice imbalance here, okay, and I bought it as well, and the signal was on my Telegram channel as well. So if you see, price did a break of structure, went up, and there was a very nice FVG left here. Then price did a very nice break of structure here, okay, and then came back down to fill this inefficiency in the form of internal liquidity. It took external here. If you see, it took external here in the form of buy side liquidity, then came back here and then went up. So always remember, price is either going to take external liquidity, or it's coming back to take internal liquidity in the form of inefficiency, which market leaves whenever there is a heavy buying or heavy selling. Market leaves the imbalance which needs to be filled, and that's why market come back to fill those imbalances, and that's what we call internal liquidity. So always remember, price is moving from internal to external, external to internal. This is the only thing market does. You need to look this very properly. Once you understand this properly, you will know where market is going, okay. So this was all about external and internal liquidity. If you have any question regarding external and internal liquidity, kindly comment on the comment section and I will try to answer them. So wish you a very good happy trading, and stay safe, stay healthy, take care, bye bye. We'll see you in the next video. Bye.